Wall Street has one of its worst days and one of the worst months as the Dow sinks another 400, almost 500 points. It was another miserable day on Wall Street as a series of big December plunges continued, putting stocks on track for their worst month in a decade. The Dow Jones Industrial Average dropped about damn near 500 points. It dropped 464, bringing its losses to more than 1,700 points since Friday. The benchmark S&P 500 index has dropped another 11 has dropped 10.6% this month, and it's almost 16% below the peak it reached in late September. The steady gains of this spring and summer now felt like a distant memory as we've entered the fall. Investors started to worry about the global economic growth and its cooling off, and that the U.S. could slip into recession in the next couple of years. The S&P 500 is on track for its first annual loss in a decade. The technology stocks that have led the market in recent years are now dragging it down too. The technology-heavy Nasdaq Composite is now down 20% from the record high it reached in August. The market swoon is coming even as the U.S. economy is on track to expand this year at its fastest pace in 13 years. Markets tend to move, however, and what investors anticipate will happen well into the future, so it's not uncommon for stocks to sink even if the economy is humming along. Right now, markets are concerned about the potential for a slowing economy and two threats that could make the situation worse: the ongoing trade dispute between U.S. and China, which has lasted for most of this year, and rising interest rates, which act as a brake on economic growth by making it more expensive for businesses and individuals to borrow money. The selling in the last 2 days came after the Federal Reserve raised interest rates for the fourth time this year and signaled it was likely to continue raising rates until and even beyond next year too, although at a slower rate than it's previously foretold. Scott Wren, senior global equity strategist at Wells Fargo, said investors felt that Fed Chairman Jerome Powell came off as unconcerned about the state of the U.S. economy despite deepening worries um, on Wall Street that growth could slow even more in 2019 and 2020. Wren said investors want to know what the Fed is keeping a close eye on in the situation. He may be a little overconfident, said Wren. The Feds need to be paying attention to what's going on. Powell also acknowledged that the Fed's decisions are getting trickier because they need to be based on the most up-to-date figures on jobs, inflation, and economic growth. For the last 4 years, the Fed told investors investors weeks in advance that it was almost certain to increase its rates. But things are less certain now, and the market hates uncertainty. Treasury Secretary Steve Dumbass Mnuchin said the market's reaction to the Fed was completely overblown. Investors have responded to a weakening outlook for the U.S. economy by selling stocks and buying ultra-safe U.S. government bonds. The bond buying has the effect of sending long-term bond yields lower, which reduces interest rates on mortgages and other kinds of long-term loans. That they consider that good for the economy. I don't know. At the same time, the reduced bond yields can send a negative signal on the economy. Sharp drops in long-term bond yields are often seen as precursors to a recession. The S&P, if you go by how much it's dropped this year, it's dropped 40%. The Dow fell 464%, or 464 points. The S&P dropped about 40 points. Yeah. The Nasdaq fell about 108 points. Something called the Russell 2000 dropped about 24 points. Smaller company stocks have been crushed during the recent market slump because slower growth in the U.S. will have an outsized effect on their profits relative to the size. They also tend to carry more debt than larger companies, which could be a problem in a slower economy with higher interest rates. The Russell 2000 is down almost 24% from the peak it reached in late August, and it's down 14% for the year to date. The S&P 500, which tracks larger companies, is down 8%. The possibility of a partial shutdown of the federal government also loomed over the market on Thursday. As funding for the government runs out at midnight Friday and general shutdowns don't affect the U.S. economy or the market much less unless they stretch out for several weeks, which could delay paychecks for federal employees. Also, oil prices continue to retreat. Benchmark U.S. crude fell 5% to $46 a barrel in New York, and it's dropped 40% since early October. Brent crude used to price international oils slipped 6% to $54 a gallon, $54 a barrel in London. After early gains, bond prices headed lower. The yield on a 2-year Treasury rose to 2 point. Yeah, so this is getting worse. So basically, even though 45 is praising the economy, it's just getting worse.